Hello and welcome to this channel. My name is Peter, and today we're going to be covering the stock market, and we're going to be focusing on sentiment analysis. Now, at Game of Trades, a lot of our investments, a lot of our research is based on sentiment analysis. It's the idea that when market participants are starting to get overly optimistic, like they were during the dot-com bubble, like they were at the 2007 peak, that's the moment where you should start to get bearish. And when it's the end of the world and everyone is panicking, that's typically the moment where you want to be entering the stock market. So in this video, that's what we're going to be taking a look at. What is the sentiment like right now in the market at all-time highs, and how should we be positioning ourselves? Now, to get the full view of what's going on the markets, we're going to take a look at a daily chart of the S&P 500 first. And so you can see this is the recent rejection that we had off that long-term price channel that we were just looking at on the weekly chart. And so you can see we've had a pretty nice reaction here. And so far, the S&P 500 has been bouncing. Today, we're up almost 2%. We'll see how the day closes. But this price action is definitely bullish for the short term. Now, we are still at long-term resistance. So from a swing trade standpoint, this is not an area where we want to be taking long positions. If we have a sell-off back down to these support levels, that will be a nice opportunity for entry. But until we get that kind of high probability setup, we're not looking for entries, but we're watching very carefully. What happens here over the next few trading sessions is going to determine what happens on the stock market over the next few weeks, if not few months. Right? We are at resistance. We have this consolidation pattern after this nice trend. If we have a powerful breakout here and break out above that resistance level, could that fuel a melt up move past that resistance and start to accelerate the uptrend? Absolutely. We respect the resistance levels. That's why we were starting to get neutral in this area as we were approaching that long-term resistance, and we expected a reaction. So either a reaction or a powerful breakout. And if you get a powerful breakout, you wait for the back test, and that's when you enter, when you have that support level act as support. So this is not an attractive look on the stock market. We much prefer other trades right now, like Bitcoin currently breaking out above its price channel resistance here. If we see this breakout hold, unlike this false breakout right here, we could really start to see some parabolic moves in Bitcoin and head into the $70,000-$80,000 region in the next few weeks on Bitcoin. That's what we're focusing on with our members at Game of Trades, identifying the buying opportunities at these price channel supports. And now we are set for the next leg higher. But now I quickly want to take a look at the S&P 500 futures chart. So this is a chart that also takes into account the overnight price action. That's why you don't see any gaps on this chart. So it gives you a full view of what's going on in the stock market. And you can see right now we have this consolidation range here that's breaking out. So that's happening as I speak. We'll see where we close the day. But if the S&P 500 manages to hold above that level, the 3864 point level, that would be bullish, and we could see a nice rally from here. And you can see what's going on the MACD. We're finding support at the zero line. If you've been following us for a while, you'll know that's incredibly important. It tells you that the trend has worked off its overbought conditions. It's back to a neutral momentum. And if we get that crossover and that breakout, it's ready for another leg higher. So we'll be closely watching what happens on the markets over the next few days, still in neutral positioning, but always with that bullish bias, right? The long-term chart is telling us on the weekly chart that we're still well within that bull market. So we're not going to have a bearish bias until we have some significant damage on the stock market, like breaking down below these support levels right here. We'd also want to see the NASDAQ 100 break below this channel here for us to start getting bearish. If we see the NASDAQ 100 break back down here, that'd be a false breakout right here, and we'd be looking for a tag back down to the bottom of the channel. But for now, that bullish structure that we're talking about is still intact. Now, from a long-term standpoint, equities as percentage of total assets is at all-time highs. Stocks are expensive. When you look at equities versus GDP, stocks are at all-time highs. Again, showing that in terms of the long-term investment of capital, equities are too expensive. That's why at gameoftrades.net, we look for opportunities outside the US stock market. So emerging markets, precious metals, commodities, cryptocurrencies, these are going to be the outperformers over the next decade. Now we're going to start taking a look at the sentiment analysis that we talked about at the beginning of the video, but I want you to keep in mind that melt up scenario that I talked about, because if we have a breakout here, that changes the game. All right, that's very important to understand. If we have a breakout here, it would be a similar technical posture to 1996 and 1997, right? Throughout the dot-com bubble, it was in the early stages of the dot-com bubble, which eventually led to a multi-year blow off top. Is that something that's possible over the next couple of years? Absolutely. So if a scenario like this happens in terms of trading, in terms of swing trading, we want to be all over that. We want to be taking advantage of that. By the way, make sure to subscribe and make sure to hit the like button on this video if you're so far enjoying. Now let's take a look at the bullish sentiment on the AAII sentiment survey. So on the chart above, the black line here, that's the S&P 500. This is where we currently are in 2021. And right here, you've got the sentiment that varies from extreme bullish to extreme bearish on the green line right there. So I want to first take a look at the current bull market that we're in, right? Because that started in 2009 up until right now in 2021. And we've had 4 major spikes in bullish sentiment. Once in 2010, 2014, 2018, and 2020. And so you can see right here, if we take a look at what happened after those big spikes in sentiment, right? Because that's where we are. We're right after a big spike in sentiment. So what happened previously in 2010, it was followed by a relatively large correction in 2011. Now, we did have fundamental factors that brought the markets down throughout that time, but nevertheless, an overly optimistic market yields lower returns. Right here in 2014, big spike. Now, over the course of the next few months, the markets were flat and even corrected with 2 large drops in 2015. Again, an overly optimistic stock market yields lower returns. Now here I want to zoom in because you can't see this data point quite well. You've got a big spike in bullish sentiment here, followed by an immediate correction here. I believe this correction right here was 12% in 2018, and it was also followed by another correction here in 2018, the repo crisis. So again, an overly optimistic market yields lower returns for the next year. So let's zoom into what happened in 2020. We had that big spike in October after the election, and so far we haven't had a correction. In fact, the stock market has rallied higher, but considering the previous data points that we just talked about, we could see lower returns over the course of the next few weeks because of the overly optimistic stock market that we had in 2020. And by the way, this is what kept us bullish, the sentiment analysis throughout the corrections in June and throughout the corrections in September, because you don't tend to see big bull market tops or bear market rally tops when sentiment is bearish. So that's how we knew it was safe to buy the dip. So that's how we knew, amongst other factors, that it was a good time to be buying the dip. You can see throughout this entire period, we can look at the sentiment, it was bearish. You do not see big tops on bearish sentiment. Right now, we've had a bullish sentiment. So could this be a big significant top from a sentiment standpoint? Absolutely, especially considering we've just tagged this long-term resistance. We have a combination of big resistance and overly optimistic stock market that could lead to additional downside, right? So that's why we're not in a rush to be buying the dip here. What happens if we start to get into a 1996 or 1997 scenario? You can see on this chart, going back to 1996, the sentiment did not predict a significant correction. In fact, you had multiple readings of extreme bullish sentiment throughout the dot-com bubble that did not signal significant tops. So that's important to understand. If the market environment that we're in is switching from a classic bull market to a bubble bull market, then sentiment analysis is not going to be working until you start to see these types of readings with 75% of investors that were bullish at the very, very top of the bubble. So if we see that breakout that we talked about, you could start to see some extreme bullish sentiment over the next few months. Now, if you like the content that we put out, make sure to go and check out our website at gameoftrades.net. We've recently posted the full fundamental case for gold, right? This is a huge 2,000-word article talking about the short-term technicals, the sentiment, the long-term fundamental case, the allocation strategy, what you need to factor in when thinking about your allocation. So if you're interested in that, make sure to go and check out gameoftrades.net. Now, that's about all I wanted to cover in this video. If you enjoyed, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading, and see you next time.
So, you want to invest in the cryptocurrency market, but you don't know where to start? Welcome to the co-vesting module on Prime XBT. The co-vesting module helps investors and talented cryptocurrency traders find each other. With an easy-to-use interface, you can compare and replicate successful strategies with a proven track record. You can follow multiple trading strategies to diversify your risk. Co-vesting module on Prime XBT. They trade, you profit.